where the support is, or do you think we?
No. So
I
the
was
way I
listening. Do
see
you
it,
follow Siam? Do you follow Siam?
yeah, I do.
Because Siam's a UK guy that I got introduced to from a friend who was working with him personally at one point.
Oh, cool.
Um, so I've kind of like kept my eye on what he always has to say. Did you see his video, his update today, where he was like, "It kind of doesn't seem right that we've dropped so
Oh
quickly
yeah, I
so
saw him
soon."
uploading that, and I think I saw Becker made a tweet like that as well.
Yeah, look,
Was
if you
it?
go back to the page a minute ago,
Yeah,
yeah,
here.
that's it. This isn't the
Yeah.
leg down we were looking for. Yeah.
Um,
So
yeah.
in short, he's expecting it to rally back up to 24k real quick.
Oh, I don't I wasn't necessarily expecting 24k, but I don't believe that, like, when I say another leg down, I am talking like
Down to 15.
I'm talking down to like, yeah, 15 14k, but that's not in this move. I think
Yeah, no, yeah.
I agree with that. I don't necessarily believe we're immediately going to go back up to 24k. I think what we're going to sit here and do is come up a little bit, retest our 382, this big support level, our resistance now. And we're just going to come down, sweep around 20k, and just trade for a bit, sideways for a bit. Yeah, maybe take out 24k a bit. And then we get our real leg down 15k area. I'm not going to hold these shorts all the way down to 15k. I don't think there's going to be any issues. I don't think there's going to be any big dumps right from this move.
If it went back up, you'd have to scale the trade out so that you can have a
Oh yeah, I
better
mean,
liquidation price.
I've been already scaling out in terms of taking profits, and I mean, look at where it's sitting right now. That's fucking fucking sitting right on my line. But yeah, I've just been like taking profits here and there. I've got another major TP a bit below here. I will actually take. I mean, I got 70 left in there. I am gonna take 15 more at where we're at right now. I mean, this is literally $15, so it's fucking nothing, but
Yeah, but it soon starts adding up.
yeah, I mean, I could be trading with real money too, but I put it all in safe spaces because it's like my business money, and I want to just keep it overviewed, keep it like on the sidelines for now. Yeah, I'll take more gains down here, but yeah, I've pretty much taken most of my gains already on this. Well, over half. So, yeah.
So in this kind of a move, like let's say for example, I put £10,000 in,
Yeah.
$10,000 in at the top, and I was like, oh, I think it's going to short, and I shorted it from there. And you put leverage on it. Like, what kind of returns do you get on that type of like investment?
I mean, it's just like it depends on how far you short it and what your leverage is. Because I mean, if I put a $10,000 position, right? I mean, it's whether I'm playing $10,000 25x, so I'd be playing $250,000, or my actual position's worth 10,000. There's that's something to consider.
I still need to.
So the way to think about it really is just all you're doing when you're opening on leverage is just you're using less money to open a bigger position. So I'm sitting here. If I'm opening this on, let's say by dollar cost, right? If I'm opening here 10% of my available account right now, that's 200. It's $20 essentially, and this is on 50x, right? Actually, it's easier to do this if I go on 10x, right? So I could say this is 10% opens $20, or well, it's going to be 250 Matic, let's say, right? That's 10% of my account, so $20. But if I set this to 1x, right? If I set this to 1x, oh fuck's sakes, and then I say 100% of my account, it's basically the same thing.
Right.
Because there's no, like, it doesn't really matter what your leverage is. It just matters how much of your portfolio you're using.
Okay, so well, let's say for example, like how does the multiplier work in a sense of like if I put 10,000 on and then I say, look, I want 25 times leverage, would I need to have 250,000 in the account to be able to put that kind of a trade on?
No, because what'll happen is your risk comes in the form of liquidation, right? So you'll see currently this trade, I mean, they're very small, so it doesn't show very well, but you can see that this trade, I'm on cross, so this for it to it would liquidate my entire account essentially if it hit. But you can see that I'm trading with 0.35x, so I'm using 35% of my account is this trade essentially. And if price were to go to 92,000, my entire account is gone essentially.
Right.
If you're on higher leverage, right? If I have 10,000 in my account and I'm going 25x the whole account, you're going to have a very tight liquidation. It's because you're literally just, this would be cross 25x, for example. Because there's just not a lot of margin, right? So that's why, I mean, I'm usually playing, if I'm on 100x, right, for example, I'm going to be playing with 5% usually. And that's going to, like, I guess I can pull up the calculator and it's going to tell me. So if I'm on 100x leverage on this, and I open at 21,200, let's say, I need liquidation price. Sorry. So my liquidation price, if I'm opening a long with this just 5%, right, on 100x of my account, my liquidation price is going to be $100, right, on isolated. So if I don't have any margin, like that's where the risk comes in. I mean, realistically, if I have real money in the account, 5% is not going to liquidate me easily, right? But if you're saying like you're going 25x the whole account, so let me actually see what that is in numbers, because then I can actually visualize it. So I could say go 0.233. So now I'm basically opening the entire account on 25x leverage, or 25x the account. I'd have a $700 gap between my entry and where my entire account would be gone. You know, that's where the risk comes in.
Right. So you'd have to be really fucking certain if you're going to do such a trade.
You wouldn't do such a trade. That is not something you'd ever do, because you'd run into the, like, you wouldn't be able to set a realistic stop loss, and that's like the number one thing is you don't risk losing more than 5% of your account on a single trade, and even that is quite a lot. Because what happens is when you lose, like, this is all percentage based, right? So if you make a win, it's going to be a percentage of your account, right, that you'll be trading with. So if you win consistently, you're going to exponentially build that up. So if I grab an exponential growth calculator here, I could say that I have $100 in this account, and I make 3% trades every day, like just $3 once a day, right? And I do that, say, once a day for 2 months. I'm going to have $600.
Sorry, once a day for 2 months, yeah?
Yeah. That's just like arbitrary. If I do it 1 month, I'm going to have 240, right? And this is very achievable.
If you were to do that over like over on an account of like 10,000, though, that would be.
I mean, you're going to get the exact same values, really, like the percentages, and that's what it matters, right? Like,
so if you were to make 3% a day for 30 days, you'd be making 24,000 a month.
You turn 10K into 24,000 in a month.
Oh, right.
And then the next month, that
14,000 profit.
And then that next month, the 24K becomes almost 60K. And then the next month, that's 143K. And then the next month, that is 350K.
So like compound interest.
Yeah, exactly. That's literally what it is. But the problem is that works the exact opposite direction as well. So if you start losing in that way, if you start losing more than 5% on a single trade, it's going to be harder and harder to make that back.
Yeah, I understand.
Because I could say I have a 3% a day on $100, but if I suddenly lost 20% of my account, I mean that just cut like it massively, right?
I mean, you'd only need to make like 1% on 10,000 though for you to be able to earn a
Oh yeah,
substantial
I mean
income per
for
month,
sure.
right?
Like you don't need like crazy numbers. I mean,
Can you do it on 30 days?
yeah, I mean 1% you'd get 3.5k for a month. Like,
Yeah, that's crazy.
and I mean the trades we make, right? They're
How
getting
easy
way
is it to
more.
make a 1%?
That's super
1%.
easy. With leverage trading, that's ridiculously easy. I often like I mentioned these were 2 trades. I opened these on the 16th, right? I opened these back here.
Yeah.
When I saw that high test, that just confirmed it. But I just opened these. They were a very small risk in comparison to like my account size, and I made almost $40 off of them. And I have like I mentioned, it was like less than less than a $250 account.
So technically, if that was on, just for the sake of like maths that lines up, if that was on a £2,500 account, that would have been $400.
Pretty much, yeah. I mean, I would have probably opened slightly smaller position, but yeah, it would have been pretty similar. And I mean, a friend of mine, like his best week back when we were trading down, like Bitcoin down all these dumps here, right? So this one, mainly this one, he doubled he doubled actually $250 accounts in 2 weeks, in less than 2 weeks.
Yes.
And that was just consistently trading, and he didn't even have he was just taking trades. He wasn't like trying to statistically base his shit like I've been saying. I mean, look at this fucking shit. I did some more back testing on the strategy. I think it's at, let me actually see what it's at now. But just this simple strategy. I think I showed it off in the previous live as well. But it's out of the 54 iterations I checked, 47 of them made money, with the average move being 2% unleveraged on Bitcoin, like within 3 hours. Like it's kind of nuts. I'm a very big fan.
Yeah, I need to go back and check that live, I think.
I don't think I have I think that was the live that the recording cut out though.
Shit.
The one that.
Yeah, I might need to pick your brains on that one then.
Mm-hmm. Yeah.
No worries.
It's.
I think I saw you screenshot Hadouken's questions. I thought they were quite good questions.
Yeah, I can go over those. Got pinned them. So he asked what my daily routine was. On how I keep on my grind, stay on top of my game. I don't actually like have a daily routine anymore. I mean, I tend to watch. Very big fan of Eric Crown on YouTube. So this guy's you'll see a lot of similarities between the stuff I do and he does, but he's probably some of the best TA I've found on YouTube. He like keeps his opinion out of it completely, mostly, and he just goes back in time and tests what played out when. I've popped it in crypto chat. He's just really fucking good. I know some people in the server already knew him, and I know he also shows up on Elio Trade's channel every so often.
Yeah,
if you guys watch him.
I think that's the guy that Elio kind of like has do all of his TA stuff, isn't it, for his people?
Yeah, and I mean he's pretty good. This indicator I have down here, this is actually his as well, Crowns. But yeah, as for what my daily routine is, like I said, I don't really have one, but if I do basically do something every day, it'd be generally just watching Crown's video, like what he's looking at, and just mostly charting Bitcoin. I just see what it's doing, it gets pretty boring a lot of the time. But the things I mainly keep an eye on is just Bitcoin and a bit of this SPX, the SPY, the S&P 500, and the Dixie, which is the US dollar index. And it basically, when this goes up, this is the value of the dollar against, I believe, 6 other major currencies, which like the Swiss franc, the British pound, the euro, the Japanese yen.
What's
like
just made the dollar
pound.
pump today? Because it's quite a significant green, like couple of candles for that.
I mean, like, the thing is, right? I don't know if it's news or whatever, but basically these are just economic conditions, and you can chart them the same way. I think it was back here in, even way back here, you could already see, but like, I remember talking to people and charting this back, even back here, like in August and September last year, and we were seeing this breakout. I mean, it's just been on a parabolic run, and you can chart these, and you'll see that all these, even on here, like these fib levels line up. I mean, this is just an extension I pulled from 2018, right? And you can see how beautifully it just lines up with all these levels. But what I've been saying for a while now is just like, you just trade this, look at this like any other chart. Like, it doesn't, like, you can basically chart anything in the world, whether that's fucking childbirth statistics, or in this case the US dollar versus other currencies, and you'll likely get close to an outcome that you were expecting based on your TA, right? In this case, I've been saying since we were, I think, coming up around here, around that blue line, that I was gonna waiting for it to come to the 1272, which right where it topped out here, waiting for a pullback, which we got, and then I was gonna say heading to this area, the 1618 fib, somewhere between there and 113, so kind of in this area. I've been waiting for that to get filled. Yeah, I think we're going to go up there coming into Q4.
Wow.
So like end of year. And that also lined up with my Euro USD chart, which has just been, like, this is the Euro versus the dollar, and it's just been getting absolutely smacked. Hey, we're about to hit parity again. We're about to see the real flippening. Who cares about ETH and Bitcoin when you can see the Euro versus the dollar? Oh my god. Yeah, I've been expecting that to come into like the 97, 96 range. Also like December.
Wait, wasn't it $1 and a euro? Where they're the same thing? Is that still the case?
Yeah, so it's about to hit that again.
So again, it went the other way. Okay,
it had a little bounce. Look at how fucking perfect that goes to the fib as well. It's so funny, bro. But yeah, we're at €1 is currently worth $1.004. So it's just barely worth more than $1.
Because I sold, I think when the dollar was worth slightly more than the euro, I converted I put about 40,000 into dollars into euros.
Yeah, and I've been waiting for it, like, I think I've been calling it since, like, I think it was literally, like, the first time I was looking at it again was around here on this candle, back in early June. And I was just looking at it and just telling a friend of mine, like, oh, the euro is going to fucking, is going to flip with the dollar. And he was like, nah, it's going to take forever. And I'm like, are you sure about that? And then just in the next couple of weeks, it just absolutely shat itself. And I think coming into Q4 and just, October, November, December, that area, I think we're going to see...
Gets even worse?
I think we're going to see it hit this yellow line, which is just our base support line, essentially, for this massive... descending or falling wedge, whatever you want to call it.
Yeah.
Hopefully we could see a bit of a bounce there, see it hold there. Otherwise we can definitely I I think we might make some new all-time lows. That would be kind of a yikes, but
Yeah.
I think it would line up well going into Q4. I think we might see a bit of a Fed pivot December or early next year.
Hmm.
Maybe they'll turn on the money printers again, and we can. Because I mean, this is not like people might say like see that the dollar is strengthening against the euro and the Dixie is flying, but that's fucking terrible for them because no one wants to fucking trade and shit anymore because it's just bad for trade with other countries. If you're gonna be like everything's gonna be devalued against the dollar essentially.
Mm.
And that's why like you don't want the dollar to go up because that's why you see like you'll see this big rally in the dollar now, and that's why you'll see now red candles forming on the SPY, and I mean definitely on Bitcoin here. I mean this is just the exact inverse essentially. Like I think we can pop this on here. Like you can kind of just see. It actually stayed pretty flat here, which was interesting. But you can kind of see where, like, as it's pumping, Bitcoin dumps, and then it consolidated a bit. But it's generally just, it's not great when it pumps. Not great for anybody. Yeah.
Yeah, it's pretty tricky.
Adukum had some other questions. So what tools and indicators do I trust the most? I mean, there's only really a couple things I use. Like, most of my TA is just based off of most of the trades I post, if not all of them, are just essentially based off of support and resistance.
In the fib.
And the fibs.
Yeah.
And those are like just like the fibs are really just profit targets or other levels that you can break, like support and resistance. So you'll see here we had like a nice little retest of it. So we broke below, had a retest, and there you could have a very nice entry. Like you could use that as an entry signal or whatever.
Okay.
But I mostly draw my own lines. So
if I understand correctly, it would be that you're using the fibs to help you. It just helps setting numbers and patterns, like rules more is the word I'm looking for, so that you actually take profit off and you have some numbers there to work on, because otherwise it's just
I do take a lot of profit, sometimes too much even. I have that's why I always add runner targets, because I need to like keep myself from like closing the entire position and not getting any benefit for when it dumps all the way, right? Like on Fit5 for example here, I sadly didn't actually catch the fucking second entry, which fucking pissed me off, but or I didn't actually catch the real entry, I mean, but it's just been fucking dying, bro. I think we got in trade was like here, so this was originally like the fake out, right? So this was when I called it in this little area, and I said I wanted to see like a pump at least, or a bounce at least to that very least to the green line, but we didn't get it, and then we just kind of faked out here, so I didn't really get the entry on that, and then it's and I'm glad I didn't. We trended up, got the bounce I was looking for, went a bit higher than I anticipated, but then we did come back to that level, and you can just see we had a couple tests exactly off of it here, and then that fucking candle that did break it sent us fucking to oblivion, down to shit, straight through all our TPs in like 2 candles. It's beautiful. And then I didn't actually say put your stop loss at break even, because I didn't. If I had my position in it, I wouldn't have done it. I would have just kept it a a bit higher, because at that point, like, if I've taken 3 TPs, right, I'm going to have 10% of the position left, right? Maybe 15 for my runners. And at that point, when I want runners to really run, I'm going to, like, leave them some room, because even if they hit stop loss, right, I'm going to lose, like, a tiny, tiny bit. And if you did put it break even, then, well, you would have, I mean, you would have still bagged your 3 TPs, but you would have stopped out, like, just barely here. And you would have missed out on this massive fucking dump here that smashed both runner targets as well.
Crazy.
It went way past them even. Like, I think my targets were 8.7 cents and 9.5 cents, and it just completely fucked right off.
Mm-hmm.
Yeah. Aside from the fibs and the resistance, because that's kind of like the most basic stuff that you can build stuff off, the stuff that I actually use for, like, building strategies. The most important thing is having my EMAs for trend, and I don't use these as support or resistance, but it's the most basic validation for any of my strategies that I build, is that the trend is with me. Because the easiest way to make strategies more profitable is to not fight the trend. So I could go trying to short, make a strategy trying to short these tops, but I'm only ever going to catch a tiny bit. You'd have to be, like, you know, catching tops. Whereas if I'm just going to say, well, I only want to get in, for example, you might have a strategy where you wait for a downtrend to start, and you get in once you see a bounce, like a test of your green 55. Like, you could just set orders and move them along that green 55, and you might get filled, and you can catch down moves. Now, this is not the greatest example of it, but it could be, you know, you can catch the actual downtrend rather than, let me actually pull this on the 15-minute, then you can actually see where that works. So you can see how you started this downtrend, and yes, you missed most of it, but you could have filled right there. And you'll see a lot of these on the 15-minute chart. And then you'll catch, like, big, I mean, that's the 2% dump right there, you know. And that's how simple a strategy can be. I'd say have a couple more more validations, but here as well, you'll see test of that around that 55 just before making a massive dump, and you'll actually find loads of these if you go through the chart history. I mean, here as well, look at that test of 55. It wasn't as clean, but otherwise you could have had this one as well. And these are just very it's a very basic strategy, and I mean, you can just play these trends down, because you'll get way bigger gains shorting in a downtrend than in an uptrend, you know.
Yeah, all makes sense, dude.
Yeah, so that's my that's the trend. So that's the most important one. Then my second most important one that I pretty much always have on. I don't always make use of it when I'm trading, but it's the BBWP, and this is a free indicator. You could just go on TradingView, and if you just search BBWP, you can find it. Bollinger Band Width Percentile by the Caretaker. And essentially what it does is it measures volatility in the market. So when it gets to really low points, there's very low volatility, according to the indicator. And you'll see that, I mean, in this case, right, it was really low here. And you'll see that it was kind of just doing nothing. But when you, the way you essentially incorporate that into strategies is oftentimes when you see expansion. So when it starts going back up from 0 or whatever, wherever the fuck it is, right? When it makes that tick up, red is not the right color. When it makes that tick up, right, you'll start seeing those big gains. Now this is a very extreme example, but I had a strategy essentially based on that in part. So you'll see here that I'm essentially just waiting for my BBWP to get below 10%. And then when my MA and my BBWP first make their tick up, I would say take a long, because it's an uptrend and because this other indicator that I'll go over in a second is showing light blue or white when it was blue, dark blue before. That would be a long signal, and I would have caught, like, say I got in at the top of this candle, I could have caught this 3.6% move up in the next couple hours, right? And you'll see, like, it just goes from very little happening, but then when you see that expansion first come in, right here, I mean, a couple candles later, sometimes it's more extreme, but a couple candles later, you'll start seeing a very strong uptrend, and that's kind of how you get in front of these moves. I mean, this one was a bit definitely harder. Like, this one didn't catch it as well as a person might have. Like, you could have probably caught this if you were not trading this strategy or doing your own thing. You might have caught this, but there's very much this is another great example. So you'll see below 10%, see that expansion happening. On this candle, you get that close, and then you catch the big move up. Now I've written a bunch of, like, conditions and invalidations for this to weed out all the bad iterations, essentially. So in this case, like, you might think, why wouldn't you take this one? Because this was also below 10% and it turned up. But the problem is, it was telling me to long, right? But my EMAs, my trend was still a downtrend. So the way I go around that is, well, in my strategy, if I want to long, at the very least, my 9 EMA, the orange one, the orange line needs to be above the yellow one, and I need a candle close above the green one. And that's, for me, enough of a confirmation that I'm turning back into an uptrend, and I can trust this light blue signal and this expansion to turn into a real uptrend. And in this case as well, so you'll see here, we just barely crossed those moving averages, and we just closed below it. So that's enough of a short, on top of the dark blue signal, so that's enough of a short signal for me. And then it took a minute here, but then boom. And then you could even take it all the way down there. If you decide to hold your positions that long. But yeah, so that's the volatility one, right? And then the third one I have on this chart is the Jewel Light, which is by Crown, like I mentioned. Sadly, it's a paid indicator. It's like $30 a month, and I wouldn't necessarily recommend you pay for it. I'm sure you can find free alternatives, but essentially it just gives you a bias on direction. So it's like a momentum indicator, kind of like a stochastic RSI or an RSI. And it just gives you a bias on the direction price is going. So you can see when it's dark blue, price action's bearish. When it's light blue, price action is quote unquote bullish. But it's really like it's an oscillator. So you'll see, like, it can be light blue, but it cannot. It didn't even need to go up. I mean, this was consolidation, and this is the same thing you'll see on RSIs a lot as well. It's very low here, and when it turns dark blue, it just had a big downtrend. It got to these really low levels. You might say oversold, for example. You might hear someone say, and then it turned white, and we had that pivot down in these low sections here, right? And once you have a pivot in this low section, you'll often see maybe a pullback, or at least on your indicator, you'll see a pullback, right? So it had a big blue run up, but in reality, that was just consolidation on price action to give it more room to do this exact thing again. And that's why, like, these are like the least important. These are I use them to get a bias on price, right, in my strategy, but you can't, like, I don't use this as, like, the main thing to a strategy. Because, like I said, trend is most important. I'm not going to long this, a signal like this, because there's, like, I'm in a strong downtrend. Like, there's not much to be made in longs.
Yeah.
I mean, even if you zoom all the way out on a chart like this, right? Like, yes, if you caught the bottom to the top, you made 43%. But also, you could have been shorting this way down, and bottom to top, that's 75%. And that's, you know, that's down, so that's a lot more realistically. But sadly, you can only get 100% down. Oh my god, Bitcoin just keeps dumping while we're talking. Thank you for the money. Thank you for the money. I appreciate it.
I think there's a lot. There was a lot of talk going on of the fact that there was a lot more. Well, I was listening to what's his name? You might have seen him. He does his videos and he says, "Without further ado, what's his fucking name?"
I have no idea.
Oh mate, he's so he makes me fucking crack up, bro. But the way he speaks, he calls it the baby balls and the fucking. Where's the video, bro? I've got it in my history here somewhere. Tyler S.
I don't know who that is. I'm sorry.
Oh mate, he's fucking hilarious. Let me show you him, bro. I think his TA is pretty spot on, but he predicted all of the stuff that's going on. Put it in crypto chat.
Yeah. Bro, a friend of mine, like a little bit ago, we were chilling 1680. He was like, yeah, I'm gonna look for some longs, and I'm like, no, I'm gonna hold off. We're on very minor support right now. Yes, 1680 does get you in this, like, you do have a bit of support from our like bounces around here, right? And these mini bounces there, so you do have a bit of a level there, but I was like, nah, the more major one is 1620. I'm just gonna hold off if I am gonna take any longs, which I'm not, because there you have the more macro, or the more major tests here, all these a lot more relevant price action, in my opinion, lined up there. So I was saying like 1620 to 1580, and right now, where are we fucking chilling? 1620. I think we're gonna look some wicks. I think we're gonna see some chilling around here before maybe having a bounce, maybe having a pump. I guess we'll see. I don't really have a bias at this point. Yeah. And Dukin also asked, is the market cipher worth it? I've heard about it. I don't pay for indicators. The main reason is just that there's always a free alternative out there if you just know where to look. And generally, stuff like indicators, they don't actually work, right? Unless you're making a strategy based on indicators and you're fine-tuning that, then yes, you can definitely get stuff that works. But usually, if you can pay someone to get a magic button, that's just not how it works. If I hear someone say that, I don't trust it. If they say they got an indicator that just combines a whole bunch of stuff into one, and you update it to your asset every couple days to make sure that it still lines up well, then I'm inclined to believe it. But having a thing you just buy and magically you start making money in a market, I don't trust that. I haven't looked into the market cipher enough though to comment too much on it.
I mean, if it's not too much money, I think with those types of things, it's like anything. Try it out, see how it goes. Yeah. If it feel like it's
yeah, I mean, I think a lot of indicators will be like, oh, the only thing you need to become a good trader, but really it's just, I mean, the main thing is like anyone can learn basic TA, and I think the TA isn't even the most important important part of trading. It's just managing your emotions.
Yeah, I'd agree with that. I mean, I've not done it, but I understand that emotions where usually most people get wrecked, and that's not just this. That's business as a whole, and particularly in crypto and NFT, where you're fucking around with large portions of your money, and you end up chasing losses. That's usually where people get wrecked.
Yeah,
Is it Charlie Munger whose thing is the 5 things that will make a guy broke is leverage, liquor, and women, something
that
like
sounds
that.
about right. Yeah, I don't do. I'll do my basic leverage, which is usually I'm not even very leveraged at all. I think the highest I've gone is 5x the account, and then I'm scalping. I'll be out pretty quick, but yeah, I don't fucking buy booze, and I don't interact with people, let alone women. Maybe that's why I'm good at trading. That's how that works, right?
Safer that way, mate.
Yeah. But I forgot what I was gonna say. Yeah, a friend of mine. I was talking to him last night, and apparently a guy, like an old friend of his, bought like Bed Bath and Beyond, at like $5. And I don't know if you guys have been keeping up with that, but it's been it's a like shit coin stock essentially, and it's been going nuts because of Wall Street bets. Like it ran down from like $4.60, and it ran up 550% in 20 days essentially.
Wow.
Which is absolutely nuts for a stock. But the problem is he's on like his friend was on Wall Street bets, like all the other retards there, which means they don't know when to take profit. And he literally had to yell at him for him to take anything. And I think he took, he had like 500 or 450 shares at like $5. And he was up at $20, and I think he took 100 out, and now it just like it just dumped off this hard in a single, like it dumped 65% in a single day from the top here.
Wow.
Or well, 2 days kind of, but it's basically the same thing. Like it dumped really fucking hard. And these people don't learn. He mentioned that this dude also got in like Elon, which was like some fucking
Yeah, I remember the Elon coin. Yeah, I remember it. Yeah.
I think he mentioned he got in like around here or whatever, like on this massive run up, and he didn't fucking take profit. And I'm pretty sure like he mentioned he's still holding it, so he probably got in around here or something. He mentioned, and then yeah, it didn't fucking take any profit, and now it's down 90% from its all-time high. Yeah, and that's just fucking stupidity and greed. And when I hear that kind of shit, I'm just like, don't even be in the market. Like, if you're gonna be like that, just don't fucking even do it, because that's how you're gonna be on. Like, sure, you can have Reddit karma, but I think having a house is more important than having Reddit karma to reasonable people. But I guess believe what you will. Yeah, I fucking I can't stand that mindset. Like, if you're gonna do this, take it a little seriously, you know. Well, or if you're not gonna take it seriously, don't put real money into it, you know. Like, I've been doing it very casually the last couple of days, and that's why there's literally, or last couple of weeks, I've just been chilling. I haven't been actively trading, but I've just put a couple $100 in this account, right? If I'm not gonna fucking give this my full attention, right, I'm not gonna put real money on the line.
Yeah.
Like, I could toss a couple grand in here, but if I'm gonna be fucking, if my mind is gonna be on real life work or other shit that I might be doing, I'm not gonna fucking sit here trading with that kind of money, you know.
Do you feel like you need to be in it full time for you to be able to trade larger accounts, or is it not? Does it really matter? It's
I
just
mean,
that you.
If I'm taking trades like this, right, like this Bitcoin short, I don't need to be that active on it, right? But for me, it's like if I'm gonna put a substantial amount of my own capital into this, right? If I'm gonna be risking, I want to be able to give it the attention it needs, right? Um, Trades like this, I mean, they're very basic. I just had a very simple setup. Like, I can just take the short here from predicting this breakdown here, and then set my stop loss. I set my stop loss like above these highs, and then I just left it a while. And then I woke up the other day to see like this massive dump off happened, and that's nice. And I think like I could do that with a couple thousand, but the problem is if there is more money in the account, I'm more likely to go trade as well, and that's where it stems from, because there's like it's like the casino. You get the thrill from it as well. It's more enjoyable to trade with more money, and that's like, if I'm not going to give it my real attention, then I'm not going to put money in the account, because I'm not going to be able to be responsible as I would be, I guess, if that makes sense.
Mm-hmm.
Because it's going to be like, well, I'm looking at this. I got like a couple hours a week to look at it. Maybe I'm going to make sure I get some plays in that couple hours to make money, and that's just going to lead into forcing trades and making mistakes. Also, are the chart patterns posted in your education channel the ones I should know by heart, or do I have to go deeper down the rabbit hole? Do you trade off of news or strictly patterns? I do not trade off of news whatsoever. I stay out of the market when it comes to news. So that's the main invalidation condition on any of my strategies, is that I'm not in a position going into CPI numbers, FOMC meetings. Those are the main ones. Maybe if there's another big one coming up, I might just exit my position, or make sure I don't enter one beforehand, because the problem is you can't trade them. You can't trade events like that. Trading around those events can be fun because it'll be extra volatile, but trading the actual events will fuck you up. Like, you do not have an edge in the market when you do not know the results of the news, and when you're 100% going to be slower because people have bots set up, like depending on what the news is, to instantly get in, essentially. Like, they could just say, well, if it's CPI numbers are below this much percent, then short or whatever, right? You can it wouldn't be that hard to set that up, or long, or whatever the fuck position you want to take. But generally I don't trade news because I don't have an edge in news, and that's the most important thing. If I'm going to be trading, it's like, if I'm going to the casino, I don't want to go to the casino because the casino is statistically likely to win. If I don't have an edge, then I'm not going to put my money there, and everyone gets the same news, except for the people who are in the know, of course. But I don't have an edge over the market at that point, so I don't enter any positions based off of that. I'll just follow the chart and see what that's saying, that's more important for me. As for if you should know the chart patterns, so basically the ones I've posted here in the education channel, even all of these aren't necessary. So I think the ones I actually care about here are the double top, and like the triple tops and triple bottoms they've posted here is just a weird version of them. I don't really care about how it bounces. It's just if it's a triple top like that, or a triple bottom, like it doesn't matter what that 4 there is. Like that could be as high as the 2. That doesn't really matter to me. I don't care for rectangles. For symmetrical triangles, there is no bullish or bearish variant. You just play whatever side it comes out. The ones I mostly care about are ascending and descending triangles. I like cup and handles, and I'll often call out falling or rising wedges. But I usually just play them the same way as triangles or wedges or whatever the fuck you want to call them. I generally play all these patterns. You'll see that all of them have they'll have a breakout, and then they'll come back for a retest. And that's always how I play these. Any of these patterns, I will wait for a retest, because there's no reason not to, because it's more likely to come back to test it. And that's why I don't care what direction it says it's supposed to go on this chart. The more important thing to me is whether I get that breakdown of a certain angle or a certain direction, and then get a retest. Because that's just a very safe entry. It's very easy to cover, and you're more than likely to make some money on that trade if you set it up properly.
Mm-hmm.
Then I got, the last question was if I use fibs or Elliott waves. I use fibs. I do not use Elliott waves at all. I don't understand them. I don't really care to know them. I know a lot of people. I know there's a decent few like traders who swear by them, and they'll be very successful using them. In the education channel, I also posted literally, I think there's 118 pages about Elliott waves. I haven't read it, but it's a lot of stuff about Elliott waves, and I've been told by the guy who sent it to me that it's good, and I trust his judgment, so I'm just gonna accept that. But yeah,
I think it's about finding whatever works for you as an individual.
Exactly.
Do it consistently and making sure that you abide by those rules and the parameters that you set to keep you consistent. Otherwise, that's where you wreck yourself again, because you're allowing emotion into the systems that you've set about.
Yeah, exactly. And I mean, that's why the trades I post in the Discord, I can't post trades based on like my strategy, because that's based on specific indicators, and the way you trade that is on how it develops as it goes. I can't really be like, well, yeah, it's now below the threshold. You're gonna get like 80 update pings on, oh no, it didn't quite work, or this or that, so it doesn't really work. So I post based on like the just support and resistance, trend lines, and just patterns, and just breaking these and seeing retests. So you can, I think you can even see that here as well a little bit. But I could say I pull I might pull a triangle here, right? If we just get rid of that. This didn't quite as clearly retest, but you'll see. Okay, this is because it's a 4 hour. This is a very large time frame, so it doesn't show as nicely, but I might say, well, I wanna long if it gets above 1670, and I want to short if it gets below 1570, right? Whatever. And we got break to the top side, so we'd want to long, but we don't enter here because it might be a fake out. So what happens is we see a pullback, and usually I want to see it come back to the line, and then we have a beautiful retest. But in this case, it pulled back, and then it came back up into our entry, and that's where you get in. And it'd be very much a lot easier to set a stop loss for that than if you're originally playing the breakout. It's a lot less likely to get hit, if that makes sense. And I mean, that's just the easiest way to post alerts. Is just if it breaks this level, then and we get a retest, then yes, go get the money. But yeah, it's kind of hard to post like, well, if these indicators that you don't have and that you can't constantly be watching do this thing that you don't know if it's doing, yeah, that's not really going to work out.
Yeah, no, yeah, I think it would have to be like the dynamic for that to.
Oh, Repsy just fucking died. Well, while Repsy's dead, I'll answer Dukin's last question, which was what my most trusted Twitter accounts are. And I mean, in general, I will go out of my way to not look at what people are saying on Twitter because there's not much worth seeing on Twitter.
I accidentally left that by. Sorry.
I have very few people I actually follow on Twitter. Of course, gotta have Repsy in there, of course, but no, there's very little. I mean, literally, I watch Watcher Guru just to get some extra news if I do decide to go on Twitter. I do kind of like what Pentoshi puts out. I mean, whatever Michael Burry puts out is alright. I don't care too much. Just because he was right once in 2008 doesn't mean he's going to be right now. I'll see what.
Did you see he sold everything before this?
Except for the prison company, and he's talking about it now. Building prisons does not create crime. Broken windows need to be revisited. The woke dismissal of it actually believes abortion access is why crime was falling. How racist is that? Fatherlessness is correlated with all manner of crime, including interracial violence. At last census/2020, just 6.8% of confined prisoners in private prisons versus 7.5. Yeah, I don't really give a shit, to be honest. That's just him justifying his prison play, I guess. But there's very few people I actually follow, and most of them, like, I follow them, but I don't necessarily listen to what they say. I just try to generally steer clear of crypto Twitter, though I do follow Becker because it's entertaining.
Yeah, so that he had a little spell where he really pissed me off, and then recently I've actually quite enjoyed his tweets.
Yeah, I mean, it's yeah. I find it funny how he calls everyone all the Cardano holders cucks. It's always a good one, you know.
Yeah, no, it does make me laugh when he does the Cardano thing.
Yeah.
Because I got wrecked in Cardano right back at the tail end of last year, so.
Yeah, I got Becker's approval today as well. I was talking about how my shorts in Bitcoin say otherwise. I wasn't long, and he liked that. So now I'm a better trader. That's how that works. Now I'm certified. That's exactly when the guy who doesn't do real trading and he just kind of keeps a clear head and makes fun of things. When he says someone made a good post, that's when you're definitely a trader. That's how that works. Okay, but yeah, it's.
I find crypto Twitter a good meme to fucking follow. To be fair.
Oh. Emperor Bitcoin put out a little thing on Fibs. So let's just pop that in crypto chat. I could check that out. I might have a look later as well. But bro, fucking get out of here. Yeah, Twitter's just for the memes. It's not for actually learning from people. Like, I find that the whole Twitter thread thing, you always see people sharing threads, and I'm just like, okay, you're saying this now, but anyone who knows anything about TA could have seen this coming like 3 weeks ago. But nah, you blow up your thread. I don't like you do you, buddy.
Right, dude, I'm going to sign off for the night because
Yeah.
I've been up late because I had to pick up my friend from the airport early.
Yeah, I think I mean we've been going for like a little hour here. I answered
Yeah.
the questions that Dukin posted. I mean, maybe you got some questions, Squalid or Ronaldo. Maybe I can try to find some interesting trades maybe somewhere, but I think might end
Yeah,
up
just a
there.
quick one.
Yeah, what's up?
So, kind of like you were talking about earlier, I'm flat out all the time, and I'm struggling to actually be online enough to catch the trades at the point that they break through.
Mhm.
Is there any kind of notification apps or something that I can get good pings from?
Yeah, so what you do is you take a page out of my book where even though you're in 150 plus servers, you do not have a single notification because you mute all the bullshit, and then you make sure that you leave the Chad pings on, and you download Discord on your phone. And that way it automatically will show up whenever I post something.
No, I've done that already. Actually, had a big cull a while back because it was getting out of hand. But it's more a case of I find with the trades you kind of have to be online watching for that moment.
The other way is on TradingView and on some exchanges. If you go on the alert section, so this was actually for my trading thing, but you can actually set alerts based on price level. So say I had my FitFi trade. Let me actually go on to FitFi so it'll show up. So the entry was when it got below 11 cents, right? So what you do is you set an alert, FitFi crossing down, and you can say 11 cents. And you could just say every time if you want to get spammed when it starts happening, right? So if it comes back up, it'll just do it again. You'll set the expiration time. Okay, well, I'm not paying for that. But you'll set the expiration time whenever. And you can set notify on app. You can get a pop-up. You can get an email. And you can send an email to SMS, whatever the fuck that is. Basically, you can set loads of things. You can add a message here. And you can just click create, and it'll have a little alert here for when this does happen, and that would be a way to like kind of be there when it does happen, like just know when it's going on. That would be a way to do it. Otherwise, I don't really know if you can't watch the charts. Alternatively.
Is that all on the free version of TradingView?
Yeah, this is so you can have I think one alert on the free version, which I currently have set for my strategy. So like when I turn this on, I'll get like an email every time my BBWP on Bitcoin 15-minute gets below 10%. So I'm just aware that I might be able to put in a trade in the next hour or so. Oh my god, it's dumping so fucking hard. But yeah, it's that would be a way to do it. You can also, of course, if you do want to pay for premium, you can have more alerts. I wouldn't necessarily say you don't really need it, but you could just set up a quick alert every time you see a trade posted and maybe get notified. Sometimes they're very close and they happen right after I post them, but sometimes they also just, take a while. That kind of makes it difficult. But yeah, I get what you mean. This is how I would suggest doing it. Otherwise, I don't really know.
I mean, I'd like to be in front of my computer a bit more, but then equally I'd probably get emotional about it and end up chasing trades. So if there's something that can just ping me, i.e. on TradingView, like you've just suggested, I think that's probably the way to go.
And I think another great way is, if you go to, rather than Bybit.com, you go to testnet.bybit.com. You can open a paper account and you can you can trade Bybit assets with monopoly money, essentially. I mean, the only issue is you can't really be scalping as much because, there's very bad liquidity in that sense because it's just other people, like, they're kind of trading based on the real market value, but it's not a lot of volume, so you'll see loads of gaps here. It'll be more volatile, but you can essentially start using this to paper trade and learn better about trading and how you want to take trades. And if you can get comfortable with your charts, like the shorts I took on Bitcoin here, back in this area, those were not like a difficult trade, right? If you had basic like knowledge, I mean, I had some other lines drawn as well, but you could see that we were kind of having a topping pattern here. We were getting loads of like essentially rejection here. We're not really making higher highs. And then we had a big bearish engulfing candle. EMA started crossing, starting to turn down. And then when you're in a pattern like this, you can pretty much guarantee that you're going to see a move down to like the bottom end of that channel, right? So say this wasn't a rising wedge, it's just a rising channel, right? You could pretty much just guarantee that it's going to go down to the next major support area or just the bottom of the channel, and that would already be a pretty decent trade. And then you had another confirmation here. This is what we call a high test. I know Siam is a big fan of those, Repsy.
Yeah.
It's basically just when you see a big fat rejection, like at like a top or whatever. I think maybe if we go back, it'll actually be. Oh no, it's not. But you'll see that it had a big trade for the upside, but that's just grabbing liquidity and then coming right back down. And that's just further confirmation that you're going to fall. And this is like how you can trade if you're not going to be at your computer all day. You just take longer time frame, lower leverage, right? So if you're not risking much, you can easily take a trade here. And I mean, I'm up to 13% right now. I mean, it's going a bit nuts, and I wouldn't usually expect this, but I mean, even just if you took a trade down to here, right, down to the bottom of that channel, that's 4%, and that's just how you can catch. You just put a bit of leverage on there, right, and that's how you can catch these longer term moves, and you don't have to constantly watch it like you do with scalps in case something changes, because it's generally just this trend, and all the movement in between is pretty irrelevant. Yeah. But that's just a different way, like, that's how a lot of people who have, like, 9-to-5 jobs will trade, is they'll have some time in the morning and in the evening to look at or during their break, to look at their crypto or their stocks, and they'll just manage their trades a little bit, and they'll just set, like, fibs, put in very good orders, very good take profit levels, as you can see here, right? You can just put a TP there, which is what I did. And you can just scale out of trades without even touching it, because you pressed a button a couple times around here, and then just kind of let it run. Maybe move your stop loss down when you see it that it's getting to these lower levels. But it's just swings, rather than scalping. You can just swing trade. Then you definitely need to, like you mentioned, like, not get emotional and just let the trade do its thing, and just learn not to look at it. I think that's going to be very important when you're swinging, because the longer I sit here looking at this, the more even I feel like I want to take more profits, right? Which, I mean, taking profit isn't necessarily a bad thing, but if you take too many profits, then you're going to miss out on a lot, which is just going to feel bad later. So I've taken gains that I'm happy with. I'm actually going to move this down a little bit.
I think it's the same advice that I used to give with NFT. So you have to weigh up at the time, like, would I be more pissed if my trade turned into a loss, or would I be more happy with taking the profit that I can see now in front of me, because it's not guaranteed,
Exactly.
So I think you have to kind of get in that mindset all the time.
Yeah.
And that way you can't be mad then if it goes up, because it's like, well, I'm still in profit because I could have been in a loss, and that was the 50-50 that you're playing the whole time, right?
Mm-hmm. Yeah, though in this case, like, it's just learning to trust your own TA, right? Because I made a conscious choice, and I did my TA, I did my homework or whatever, and I decided to short here, and this confirmed it further. I was happy with my position, and I let it do its thing. I didn't try to micromanage it for all these little moves, because that's like, when you're swinging, that's the worst thing you can do, thinking, oh, I'll sell because it's going to have a little bounce. That never works out, because you'll yes, you might sell near the bottom, and then maybe you're lucky and you'll short the top again, but the gains you'll get from that are minuscule in the general move of things. And if you're trying to sell here and all of a sudden it keeps dumping, it's just not worth it, right? So generally, just if you're swinging, let your trade do its thing. If you're scalping, mostly let your trade do its thing. But if you do see some stuff that's going a bit iffy, just maybe get out. But generally, I would recommend just trusting your own TA, especially sticking to stop losses, because the amount of times I've taken losses on trades that wouldn't have even stopped out, and would have made me loads of money. It's kind of sad how many times I've done that, and it's just never again,
To change the topic to ETH merge and stuff, like I think there's a bit of controversy as to whether the price is priced in right now, but I just can't see how it's not, because it's all every fucking person's talking about, which in my experience, when everybody's talking about it, it means the price is already in,
Yeah, I think people do tend to overestimate how much is priced in. But for me, personally, I don't care about the ETH merge. Like, the ETH merge, it's good long term, but it doesn't do anything that would make this not a terrible market situation, and it doesn't do anything that would make me think that this chart isn't going to do what it's going to do, right?
Because I also think, though, that the problem is with any new upgrade is that although there are benefits to it, it also opens up vulnerabilities, and it only takes, especially in this space, for one hack or one thing to kind of get brought through, or for staking to cause an issue on a platform which looks after a lot of Ethereum, and then that shits the price up the wall and loses people's faith in the coin, or the system, and the big fucking issues,
Yeah. I think the nice thing, I think Bitcoin and ETH are at a point where they're, some might say, too big to fail. I wouldn't quite call it that, but it's pretty close. I'm not, like, a single issue with the chain is not gonna kill it. I mean, fucking Solana can't even stay online half the time, and that's somehow still alive, which I think is fucking funny, to be honest. Like, blockchain that can't even keep itself online is kind of worthless. But yeah, I mean, it's fucking fallen far, to be fair.
But Bitcoin's had its vulnerabilities over the years and stuff, where it's had to be rolled back, and
I think we're kind of past that point for Bitcoin, and ETH might get a problem with the merge, but I think they've very much been. I mean, it's been like fucking what they talked about ETH 2.0 back like a couple of years after ETH was launched. Like, it's been forever, man.
This merge has been coming since like fucking 2017 or some bollocks.
Something like that. Yeah.
Mad.
Yeah, it's been coming for ages, and every time it got pushed back, and now they actually got a date for it. And people, for some reason, still think that it's going to lower fees, which it doesn't. Like, all it does is reduce the energy usage of the blockchain by like 99%.
I think it's more just from the. I think the bonus for that is that a lot of companies and retail won't touch Ethereum at the minute because of how much it uses. The moment it gets down to that percentage, it now opens up a lot of retail to come in, and that's I think where the speculation for the best part lies.
In the bear market, I mean, this isn't bad, right? And I mean, a 65-cent fee, $2 for OpenSea, like that's great. You know, I people can live with that. But yeah, and in the bull market, it was kind of ridiculous. But I mean, I had EGR. He booked a one-on-one with me, and he paid through PayPal, and he had to pay a fucking $5 fee, and I'm like, bruh. He's paying more fees than he would if he was sending me ETH. You know, it's kind of ridiculous how they. I mean, I think that's just mostly a US thing or whatever. But yeah, it's because I don't pay any fees on PayPal in where I'm at. But yeah, I think like when there's a lot of activity, ETH definitely does get too expensive. But that'll only be fixed. I think right now we're in the merge. And I don't know where I posted it, but there's going to be like the surge, the merge, the purge, the surge, and the splurge. It's like the 4 stages, I guess, of ETH 2.0. And I think I don't know if it was the purge or the surge, but one of those was going to introduce sharding, which is like a different way of writing blocks, I guess, and that was gonna reduce fees tremendously. But in the meantime, basically what they've done is I'm pretty sure they've partnered with Matic at this point, Polygon, and I think we're gonna see a lot of layer 2 stuff happening next bull run. I think anyone still working through ETH mainnet and not having a layer 2 integration is kind of gonna be falling behind the pack. So I think fees are largely not going to be that much of an issue next bull run, in my opinion. Because I think most of the stuff is going to be done through layer 2s if people don't fuck it up. Yeah.
All right, boys. Well, I'm going to tap out. Thank you so much for your time, and I shall catch up with you boys in the chat.
See you, mate.
Much love. Take care now.
Oh my god. Yeah. It's kind of the one issue with days like this, that all the charts are pretty much the same. Except when you get what the fuck? What is it doing?
What chart's this?
It's just this XCN. Just a random. Jesus Christ! What is the? Oh my God! What the fuck happened? What did they?
So what are you looking for now when you're going through charts and you're trying to find something? How are you kind of filtering them out?
Literally, right? On Bybit, click on my little list. USDT perpetual, 24-hour change. I click on that. I get the biggest losers. I click on it again. I get the biggest winners. I just click through some shit coins. Usually, I'll try to click on some that I usually check, like that I usually trade, and then it's kind of like more comfortable with them, I guess. But oh my God, you're fucking shorting it back here.
You're just looking for volatility in the market, essentially.
Yeah, but I don't actually. Actually, what I look for is often moves after volatility. So yeah, you'll see volatility. Like I want volume in shitcoins, right? Because I can't take a trade here. Like this is very volatile, but there's no clear direction. But what I can do is when I was here on Luna. So on this, we had a big pump, and then we had consolidation. You know, we had loads of volume back here, so you can take these. You can be sure that it's gonna make a move, right? Because otherwise, it might just fucking fall flat. But you can. It was kind of, you know, it was making a symmetrical triangle. You know, and that's what I was looking for. And I basically said, well, we can long it above here, or we can short it below here. Now you could have taken the breakout of this, which is only something I really recommend for people who are very experienced with candles themselves and just very comfortable with their charts. You could scalp the breakout and catch this. I think I did actually do that. If you go on like lower term time frames, where the fuck did it go? I hate this. So what we did see here, I think we did play it both ways. So what we did see here was a breakout, and then we did have that test. Or was it very minor? We did see a test, and then we had that pump up, which hit some TPs. And then we actually came back down, had the, like, just blasted right through, had the breakdown, and then at a perfect, like, textbook retest, Kobo, if you will, before just smashing all the bottom side TPs. And then, I mean, if you were stop loss break even, you would have gotten out here on these tops. Yeah.
Sorry, bro, I gotta go. My kid's just woken up.
Yeah, I think I'm gonna end it here anyway, so that's fine. Thanks for coming, man. I hope this was informative.